Welcome to Trade Pro. Due to popular demand, I will be testing the classic MACD trading strategy 100 times in a row, but this time with a 1-to-1 risk-reward ratio, unlike the other tests that have been done using a 1 to 1.5, 1 to 2, 1 to 3, stuff like that. But this time you're going to see it 1-to-1 risk-reward ratio, and I have started on the mission of making sure you guys are optimizing your strategies. So I am leading by example and doing a bunch of tests with different risk reward ratios on different strategies. I started by doing it with a 1 to 6 risk reward ratio on the simple stochastic strategy, then the same strategy with a 1 to 0.5 risk reward ratio, just trying to prove the point of strategy optimization. You guys should be testing different risk reward ratios, finding the best. Don't settle for just the first thing you try, okay? But people didn't like that strategy. No one wanted me to be doing it on that strategy. People wanted the MACD strategy. They wanted some of the other ones I've already tested. I didn't know which one to choose, so I just decided, this classic MACD strategy is probably the most popular one on YouTube right now due to that Trading Rush channel popularizing this strategy with a very highly viewed video. And shout out to that channel, by the way. A lot of my viewers I know watch that channel as well, and I also think that is a good channel for you guys to be watching, as a lot of the topics agree with things that I believe. So definitely a fan of that channel as well. Trading Rush is the one I'm talking about. So go watch that channel if somehow you found my channel before his, which I highly doubt. Maybe there's a couple of you out there. But anyway, getting into this on the 1-to-1 risk reward ratio, I'm going to quickly explain the strategy and how I'm setting the stop loss and everything just before I get into the 100 tests. But that's enough rambling. Let's get into the video. Now, for this strategy, if you haven't seen this strategy, all you need is the MACD, which I have default settings 12, 26, and 9, and a 200 period EMA, and then I am using a stop loss indicator, which I will show you here real quick. Trailing stop loss multiple of ATR by Blue Phantom on TradingView, and its default settings. So I'm going to be doing the test with a 1-to-1, as I said. What you're looking for is crosses up on the MACD that happen below the zero line of the histogram while price is above the 200 EMA. That's your long signal. So right here, there's a long signal, and it's a 1-to-1 risk reward ratio for this 100 test. So hopefully we get a nice high win rate. That would be the ideal of this test. Much higher win rate than with a 1-to-2 or 1-to-1.5, but I am seriously doubting it's going to be as profitable. So there it is, 1-to-1 risk ratio over here. Cross up that happens below the zero line of the histogram, cross up that happens below the zero line of the histogram while price is above the 200 EMA, and it's the opposite for a short. You're looking for crosses down on the MACD that happen above the zero line of the histogram while price is under the 200 EMA. Okay. So that is the simple strategy that I'll be testing for this video, and let's see what type of win rate this gets and if it's actually profitable or not. Now, I'm going to make sure to use the exact same set of price data for all my tests that I do for the next few videos on this sort of risk reward ratio optimization series that I'm on here. And yeah, so let's get into it. All right, the results are in after the 100 back test using a 1-to-1 risk reward ratio on the classic MACD trading strategy. It was on the 30-minute time frame. I took 6 months of price data on euro dollar to find the 100 signals, and there were 62 winners and 38 losses, giving it a 62% win rate. The most losses in a row was 4, and the most won in a row was 7. Gain on the account 24% if you're risking 1% per trade. And then I want to touch on something that I had always thought was kind of obvious, but I just realized for a lot of the newbies, they're probably not thinking about this. If you are risking 2% per trade opposed to 1%, like in all of the tests I've shown, you're actually going to double that gain on the account. So just doing the simple math here, if you risk 2% per trade instead of 1%, you're looking at 62 wins times 2% because you gain 2% each time you win. So you're looking at plus 124% on your account. And then for the losses, you're also having 38 times 2%, so minus 76% on your account. So net profit is going to be plus 48% gain on the account, not 24 if you're risking 2% opposed to the 1% over here. So on my spreadsheet, all of those tests are assuming a 1% risk. So you can double those numbers if you are looking to risk 2%. And I do actually recommend that you do risk 2% per trade unless the strategy has a huge losing streak based on your testing. So most strategies, once they are fully optimized, aren't going to have massive losing streaks. So I pretty much always recommend risking 2% per trade on no matter what strategy you're trading. Unless you have to follow certain rules for a prop firm or something along those lines, then I don't see any reason to not use a 2% risk per trade. But anyway, I'm kind of getting off topic. So the 1-to-1 risk reward ratio, yes, it has a much better win rate than if you're using 1 to 1.5, 1 to 2, 1 to 3, as to be expected, but it doesn't make as much money. So I wouldn't recommend using a 1-to-1. Also, you have to keep in mind that this is not optimized in any way. I'm just kind of going bare bones on it, and so it's pretty good actually. All things considered, I'm counting for every single signal given without any filters. So all things considered, this does pretty well, and you could probably make some money on this. Even if you just traded it in this simple form. But that's not what you should do. This, keep in mind, doesn't account for fees or spreads. So make sure that you're optimizing. I'm going to have some more videos on trying different risk reward ratios with this strategy to see what type of gain on the account we can get using the exact same set of price data. So it'll be all the exact same signals, and it'll be kind of interesting. But this is the type of stuff that you should be doing on your system, on your strategy, not just for the risk reward ratio, but trying different ways of choosing a stop loss, trying different methods of filtering out bad trades. Watch my strategy optimization video if you want to know the 5 steps to optimize your strategy. That's really what you need to be doing if you do want to have a super resilient, really good strategy. But anyway, I'll pop this up on the spreadsheet and then call it a day. All right, so here it is on the spreadsheet, falling at spot number 22 out of 39 tests on the channel so far. Pretty good. So falling in that sort of mid-tier category between 20 and 30%, I mark it as mid-tier. If it's above 30% gain on the account, then I mark it as good, and anything below 20% categorized as bad. All right, so those categories don't really mean much, but it's just kind of a way that I categorize things here. So anyway, I wouldn't really be looking to trade this using a 1-to-1 risk reward ratio. Obviously 1 to 1.5, 1 to 2, 1 to 3 all worked better, had better gain on the account. Even though the win rate wasn't nearly as good, the gain on the account was much better, and that's what's important. Hopefully you don't need to have a high win rate in order to keep your emotions under control. If you need that, it's probably not time yet to be risking real capital, okay, if we're being honest here. But anyway, that's kind of all I have to say about this actual test. I do want to talk a little bit about the scammers in the comments, just so you guys are being safe. So there's been some imitators or impersonators. I don't really know what to call them. They literally made profiles using my exact same profile picture, and then they chat with people in my comment section impersonating me and then trying to scam. So just make sure that you are being aware of the scammers and doing your due diligence. I'm never going to ask you to send me money. And if anyone ever asks you to send them money, or anyone claims they can trade on your behalf and wants you to send them money, or any sort of thing that involves you sending money or spending money on anything, you need to run. They are trying to scam you. These people are not who they say they are. You need to be careful out there, okay? So this is to the newbies who aren't really aware of, in the trading industry, there's a lot of really shady business and scamming going on. So just please be aware of that stuff, okay? But anyway, thank you guys so much for watching. Hopefully you enjoyed it. Got the other tests coming your way soon with the different risk reward ratios for the same strategy, same set of price data, so we can do a little bit of strategy optimization and just prove the point a little bit about the importance of optimizing your strategy. Okay, so have a nice night. Thank you guys.